Guys, welcome to Let's Learn You If You Can channel. So I will be discussing today in this sessions like the continuations of the previous session. So in previous sessions I was discussing related to income from other sources. I have mentioned there are mainly 9 points wherein which we have learned 8 points. The last point is government securities. Now not government security, it is the topic name is securities. Now remember the TDS rate for securities is 10%. Okay. Now in these securities there are two types, government securities and commercial securities. Both the securities can be divided into two parts, tax free securities, that is tax free government securities, less tax government securities, tax free commercial securities, less tax commercial securities. Now we can discuss one by one. First one is tax free securities. Now in case of government securities, if they are specifying any tax free government securities, it is fully exempted. For example, so there are certain HL, take it as example of HL. So they will mention the tax free income, that is interest on tax free government securities, so you can mention as fully exempted. Next, less tax government securities, no grossing up. Here you can find two types of questions. In one questions they will only calculate interest, in another question we need to calculate interest. Okay, that means sometime they will give rupees 10,000 received from government securities. Okay, in other question they will give 10% on 1 lakh government securities. That time in second case we need to calculate like 1 lakh into 10%. In the both the cases no need of doing gross income. If they are specifying that is government securities. And one more thing before clarifying this doubt, we can find out the difference, how we can find out the difference in the questions. So the simple, in case of tax free securities they will only specify in your question. Okay, if they're not specifying, if they're specifying like Karnataka government securities, you need to assume as less tax. If they're specifying tax free they will specify. If it is tax free they will only specify. If it is not tax free they will not specify anything, just they will specify like interest on HAL government securities. Okay, that time you need to assume it as less tax government securities. So in case of less tax government securities, whether they are giving interest rate or interest amount, no need of doing gross up, you can take directly. Next, second concept, that is important concept, commercial securities. So where in which you can get some two adjustments for your 14 marks question and minimum one adjustments for 6 marks question. So in this also, in the same way you can find out if they are specifying, that means it is tax free commercial securities. If they are not specifying, it is less tax commercial securities. Like you are running an interest from Infosys Company Limited or debentures, it is, if they are not specifying anything, less tax. If they are specifying like tax free Infosys commercial securities, that time you need to consider as tax free commercial securities. Now what they are telling, always to be grossed up. So I will explain with the adjustment how to do gross up. Here there are two types. One is interest amount, you can check here, interest amount, interest rate. So in the both the cases we need to do gross up. I hope you people know how to do gross up. So in previous sessions I was giving some formula. The grossing up is like amount received into 100 divided by 100 minus rate. So your rate means 10%. Okay, now how to do this, always to be grossed up, I will explain with the examples. Next, less tax commercial securities. In this you need to divide into two parts, interest amount, interest rate. But in this case, if it is interest rate or interest amount, same calculation, that you need to do gross up. But in this case, whatever may be, you should not do any calculations, you should take directly. But here you need to divide into two parts, that is interest amount and interest rate. How to calculate in case of interest amount? In case of, if they are giving interest amount directly, so I was explaining here, rupees 10,000 received from Infosys securities. Now rupees 10,000 they are not specifying the interest rate, that means they are specifying direct amount, they are giving direct amount. So when they are giving direct amount, you need to do gross up. If they are giving interest rate, like they will give 10% on like Infosys securities, when they're specifying your interest rate, no need of doing gross up, just calculate 1 lakh into 10%. Okay, now how to analyze this? So I had prepared some examples for each and every cases, so we can discuss that now. First case is rupees 10,000 received from tax free HL bonds. So I was explaining that in case of tax free government securities, HL companies government, so in case of tax free securities it is fully exempted, so it is exempted. Next, rupees 10,000 interest received from HL limited. Now HL bonds, now here I have mentioned tax free, here I have not mentioned whether it is tax free or less tax, so that means you need to assume like it is less tax government securities. So in case of less tax government securities, you need to take directly, no need of doing any grossing up. Next, 10% 1 lakh tax free commercial securities. So I was explaining that always to be grossed up. Now how to do gross up? So here they are telling that he is receiving 10% interest rate on 1 lakh. So tax free commercial always you need to do gross up. Now in case if they're giving interest rate, first you need to calculate interest amount like 1 lakh into 10%, you will get 10,000. Again on this amount you need to do gross up, like the TDS rate is 10%. Don't take it this interest as TDS rate, don't be confused. Here this 90 of it came in the sense 100 minus 10% of TDS rate, not on the basis of interest rates. You need to do minus it from TDS rate. Okay, don't consider interest rate. Sometimes they will give 14%. Don't deduct here 100 minus 14%. You need to deduct always 10%. Okay, this is the second situation, that is tax free commercial securities. Okay, that when they are giving interest rate. Another case will be rupees 10,000 received as a interest from tax free commercial securities. So here they are giving direct interest amount. That time you need to do direct calculations like 10,000 into 100 by 90. Okay, so you can find the difference. If they're giving interest rate, first you need to calculate interest amount, again you need to do gross up. But if they're giving direct interest, direct gross up. Okay, next situations will be less tax commercial securities. Now how to deal with that? First one is I'll be going with when they're giving only interest amount. How to deal with that? So check with this question. Rupees 10,000 received as interest from commercial securities, but there is no information regarding whether it is tax free or less tax. As I told, so when there is no information, you need to assume it as less tax. So in case of less tax, they are giving interest amount directly. So in case of interest amount, you need to do gross up. So what is the rate of interest? That is TDS rate, that is 10%. So 10,000 into 100 by 90. Next, last situation, that is on the basis of less tax commercial securities interest rate. Now how to solve this? 10% 1 lakh commercial securities. Same way here there is no information regarding whether it is tax free or less tax. You need to assume it as less tax. So if they're giving interest rates, you no need of doing gross up. That means you can just calculate the interest 1 lakh into 10%, show this directly. Okay, now I will be explaining all the 9 points once again. Just I will brief. So first one is dividends. You need to remember this 10 lakh only for Indian companies. Only for Indian companies this limit will apply. Apart from Indian companies like foreign companies and cooperative societies, it will not applicable. Bank interest 10,000. This is for senior citizen 30,000. Casual income, remember 30%. Lottery, cross word puzzles, TV, that is 10,000 will be the limit. Next, insurance commission 15,000 at 5%. Gift limit 50,000. As I told, in case of friends the limit is 50. In case of relatives, exempted. Family pension, you need to follow some format, and if you are receiving any types of royalty or whatever may be, and in case any post office savings bank account, the limit is 3,500. Okay, thank you for watching this video. Like and share and subscribe for Let's Learn If You Can channel. Thank you.